What if I am stuck with a bad or inefficient policy? What are my options? Because I had a policy, I opened it, and then found out after the fact it could have been set up differently, could have been better, could have had more money with the same company, same product, but it just wasn't for whatever reason. Now, what are my options, especially if I don't want to lose money, right? I want to make sure I make a well-versed, educated decision and not have buyer's remorse again or inflict further pain again. So there are some options. Not all of them are good options, but what we do is show options. So what we've got here, a couple of them I'm going to list out. To begin, number one is a 1035 exchange. So a 1035 exchange is taking the cash value from one policy and transferring it tax-free to another cash value life insurance policy. It's a tax-free rollover. I can execute this with a life insurance policy to a life insurance policy. I can also do it from a life insurance policy to an annuity, although we don't do that often. Usually it's life to life. So some advantages to this is it does allow me to take one policy, take the cash value, and transfer it, tax-free rollover, because normally if I just cash out a life insurance policy, if there's a gain, what's going to happen? I'm going to have to pay income tax on the gains. But tax-free transfer to a new policy, and what I can do with that new policy is custom design it. So assuming I found out I had a bad policy, that likely means I found out a better way to design it for maximum cash value. So I can design the new policy for maximum cash value, and then also take what I have in the existing policy and roll it over. This is a great way to infuse a new policy with stronger, I should say, with more cash value. I can often exceed the ordinary limits. Now, that's an advantage. A disadvantage is this. I'm still opening a new policy. Yes, I roll over a large lump sum of cash depending on how much I have in the old policy, but when I open a new policy, no matter how low that minimum premium is, guess what? It's still a minimum premium. The company's going to overcharge me for the cost of insurance up front. So I can accelerate the cash growth of a policy with a 1035 exchange, but those underlying expenses are still there. So I've got to overcome that. It should always be analyzed. What does it look like if I keep my existing policy and make adjustments compared to a 1035 exchange? What should not be done, and what we will not do, is just say, 1035 looks good, let's just go for it to try and get you a new policy because it's better. We see that a lot. No, we got to look at the options. This way we don't find out, again, there could have been a better way to do things. Free look period. So this really occurs if I just opened a policy and found out almost immediately after the fact I could have made an adjustment. This is somewhat state sensitive, depends on the state I reside in. And why I say that is I'm often going to have anywhere from 10 to 30 days where I have the option, so this will be in my contract language, to free look the policy. And to simplify it, what it means is I can cancel that policy, get all of my money back, and it can be for any reason under the sun. But it has to fall within that window. So usually this is not an option because most people find out it could have been better after the fact, after that free look period. But if I'm looking at things saying, wait a minute, I found out I can add more money to PUAs, or I didn't know about this, and it's within that window, well, I've got the time to make any adjustments. Next, policy reissue. Now, this again is state specific. It's also company specific. And the companies that do allow it, we have a window. It's a bit more generous than the free look period, but it's still relatively short. I see 90 days, and that is 90 days from when I initiate or start a policy. Bad handwriting. So when I start that life insurance policy, I have 90 days to reissue it. And again, it depends on the insurance company. The ones we use, the larger guys allow it. Smaller companies, some of them don't. Again, what it does though is I can change that policy I can make it larger, I can make it smaller, I can redirect where my money's going between premium and PUAs, learn how to accelerate the cash value growth, and I can do that without impacting the MEC limit and often without any medical underwriting. If I'm making the policy much larger, there might be some financial underwriting, but the point being is I can adjust it, reallocate money, and not have to go through the whole application process again. Now, a lot of times, almost every time, with these two options, if we've worked with a different agent and found out it was set up in an inefficient manner and we mention one of these two options, expect some resistance, because if we do this and lower the base premium, it is going to result in a lower commission and a chargeback will occur to them. So good to be prepared for that. Number 4, face amount reduction. So what this does, and this is a good option to be aware of if my cash flows changed. I'm in a crunch. I can't make the payments because something's going on. I was paying in, let's call it 10K a year, and this could be 100K, doesn't really matter. And things changed. Man, I can only pay in 2K a year now. What am I gonna do? Most agents will tell you, well, there's nothing really you can do. Maybe you have it borrow from itself, but you gotta come up with the premium. Well, I'm not doing that to be sarcastic, sorry. We can execute a face amount reduction. So what this does, face amount represents the death benefit. We can reduce our total death benefit, which will therefore reduce our minimum base premium, therefore lessening our commitment, our premium requirement. Good option to be aware of. The one thing to be aware of here, especially if I'm in the first 7 years of a policy, if I execute this within the first 7 years, and we've got a lot more information on this on our training programs and such, if you're in the business, but if I do this during the first 7 years, that's going to reduce my MEC limit. And depending on what I've paid in the first couple of years, I might not be able to execute this. So again, depends on how the policy's been funded, what my options are. I want to make sure I examine it properly so I don't run into a MEC or do all the work and then find out there's a roadblock at the end of the day and you put the policyholder through all that for nothing. And then the last option, which I'm not a fan of, but we're putting it here because technically it is an option, is I can cancel the policy. Depending on how old that policy is, if it's relatively new, the disadvantage to this is I am going to lose money. If I'm in the first couple of years, if I've paid in, say, 10K a year, say it was over 3 years, I might have anywhere from 10K to 25K, depending on how the policy was designed. So whatever my cash surrender value is, that's what I walk away with. So if I paid in all this money and I get a fraction of it back, that hurts. So that's one disadvantage there. On the flip side, if I've paid into the policy for a long period of time, let's say it's 20 years old, let's say I've paid in 100K and I have 150K in cash value, and I cash it out, I cancel it because I find out, oh, this should have been set up differently, or whatever the reason is. What'll happen there, the gains, everything above what I paid in, I will have to pay taxes on as ordinary income, regardless if it's a MEC or not. So know this is a lot of information. We do have, again, more information on all of these topics in some of our other programs, especially if you're in the industry. That's what they're designed for, if you're a licensed agent. But as always, hope this was helpful. Reach out with any questions. We'll talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.